I like cryptocurrencies a lot less than you do.
Stick to the basics. Ethereum, Bitcoin. The coins are not going to go
To
anywhere.
go into trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out.
Back in school, I remember watching my classmates exchange Tamagotchis as a form of currency. These little digital pets became more than just toys. They were valuable assets that could be traded for other items or favors. This was my first encounter with the concept of value and currency.
This video is sponsored by Master Market, your go-to for exclusive Pokemon cards and collectibles. Discover rare finds from Pokemon to Marvel and more. We also offer unique statues and figures. Check us out on eBay with the handle MasterMarket90. You can also find us on Whatnot as Master Market. Looking for that perfect gift or toy to add to your dream collection? Look no further. Master Market has got your back.
Additionally, as a kid, my family would drive by the cathedral and I would see cambistas, people exchanging currency. They would trade our local fiat for US dollars or euros. It's funny because back then I would go home and think about how my own money had so little value compared to these other currencies. As a kid, I didn't know this back then, but now that I'm older, I realize this early exposure made me question the nature of money and its value. Fast forward to when I was 21 years old, I would spend countless hours playing World of Warcraft and trolling online that, you know, typical kid. Yes, I know how that sounds.
What do you mean? Now we can finally play the game. Oh yeah!
Anywho, in WoW, I learned about supply and demand, market dynamics, and resource management in a virtual world. It was fascinating to see how virtual goods fluctuated in value based on player interactions and game events. I even got to experience illegal third-party markets within the game that would offer cheap gold or services in exchange for fiat money. This added another layer to my understanding of how economics function, even in virtual environments. Yes, I was an nerdy kid, deeply immersed in a game, unknowingly learning real-life financial dynamics. Years later, those same dynamics have shaped my understanding of money and value.
You serious?
Today, as I delve deep into the world of Bitcoin, I see striking similarities between the virtual economy I navigated in WoW and the revolutionary financial system that Bitcoin represents. Just as I witnessed the evolution of a virtual economy, I believe we are witnessing a similar revolution with Bitcoin in the real world.
Fun coupons! Yeah? A fun coupon!
To understand the importance of Bitcoin, we first have to go back at the history of money, specifically the gold standard and the shift to fiat currency. During the Great Depression, gold played a critical role in the US economy. At that time, the value of the US dollar was directly tied to gold. Every dollar could be exchanged for a fixed amount of gold, which provided a tangible asset that backed the currency's value. In 1933, during the depths of the Great Depression, the US government took drastic measures to stabilize the economy. President Roosevelt signed Executive Order 6102, which required American citizens to sell their gold holdings to the government in exchange for paper notes. This was done to prevent hoarding and to increase the money supply, which was believed to help in economic recovery. Now, at that time, the Federal Reserve backed every dollar issued with gold reserves. This meant that for every dollar in circulation, there was a corresponding amount of gold held by the Federal Reserve. The system provided stability and confidence in the currency, as people knew their money had tangible value.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world.
However, in 1971, President Nixon took the US off the gold standard in what is now known as the Nixon shock. This move was particularly in response to increasing government debt and the need for greater financial flexibility. By ending the direct convertibility of the dollar to gold, the US dollar became a fiat currency. Fiat money holds value because of government regulation and the public's trust, rather than being backed by a physical commodity like gold.
Not a great plan.
This shift meant that the value of the dollar was now based on faith in the government's ability to manage the economy. While this provided more flexibility, it also introduced new risks, such as inflation and devaluation, since the currency was no longer tied to a tangible asset. In the years following 1971, we have seen a significant depreciation of the US dollar. Without the backing of gold, the dollar's value had increasingly relied on faith in the government's ability to manage the economy. Inflation and other economic factors have contributed to the dollar's fluctuating value, leading to concerns about its long term stability. Amidst these economic uncertainties, a new form of currency emerged in the late 2000s. In 2008, a person or group of people using the pseudonym Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This paper outlined the creation of Bitcoin, a decentralized digital currency that operates without the need for a central authority like a bank or government. Satoshi's white paper introduced several key concepts. Decentralization, which means Bitcoin operates on a decentralized network, meaning no single entity controls it. Transactions are verified by a network of nodes through cryptography. Limited supply. Bitcoin has a fixed supply of 21 million coins, ensuring scarcity and protecting against inflation. Peer-to-peer transactions. Bitcoin enables direct transactions between parties without intermediaries, reducing fees and transaction times. Transparency and security. All transactions are recorded on a public ledger called the blockchain, providing transparency and security. Now, Satoshi Nakamoto envisioned Bitcoin as a solution to the flaws in the traditional financial system, particularly the reliance on trust and central authorities. By creating a decentralized and transparent currency, Satoshi aimed to provide a more secure and efficient means of conducting transactions, free from the risks associated with fiat currencies. Bitcoin is increasingly being seen as a store of value and a hedge against inflation. Unlike traditional fiat currencies, which can be printed in unlimited quantities, Bitcoin has a fixed supply of 21 million coins. This scarcity is similar to precious metals like gold, which have long been used as a hedge against inflation. As central banks around the world continue to print money to manage economic crises, the value of fiat currencies can decrease, leading to inflation. Bitcoin, with its limited supply, offers an alternative that many investors believe can preserve value over time, Despite its volatility, which remains a significant factor, Bitcoin has been growing adoption by both private individuals and institutional investors. This increasing acceptance has helped stabilize its value to some extent and has contributed to its perception as a reliable store of value. As of today, several countries and private companies hold significant amounts of Bitcoin. Here are some statistics. Governments. Various governments have acquired Bitcoin through seizures and other means. For example, the US government has auctioned off significant amounts of Bitcoin seized from criminal activities. Private companies. Many private companies have also added Bitcoin to their balance sheets. For example, MicroStrategy holds approximately 124,399 Bitcoin. Tesla holds around 48,000 Bitcoins. And Square holds over 8,000 Bitcoin. These holdings highlight the confidence that major corporations have in Bitcoin as an asset. In the last year, Bitcoin has been increasingly integrated into the regular financial system, signaling its acceptance by financial institutions. Here are some examples. Payment systems. Companies like PayPal and Square have integrated Bitcoin into their payment systems, allowing users to buy, sell, and hold Bitcoin. ETFs and investment funds. Several Bitcoin exchange-traded funds (ETFs) have been launched, providing investors with easier access to Bitcoin investments through traditional financial markets. Major financial institutions, including Fidelity and BlackRock, have started offering Bitcoin-related investment products to their clients. As of today, the total market capitalization of Bitcoin is approximately 1 trillion. Approximately 4.2% of Bitcoin's total supply is held by public companies and institutional investors. Governments hold various amounts, often acquired through seizures. For instance, the US government has auctioned off over 144,000 Bitcoin seized from the Silk Road case. These developments reflect the growing confidence in Bitcoin as a legitimate financial asset and its integration into the broader financial ecosystem. Now, here's a summary of the Bitcoin holdings of various governments as of 2024. The United States, their holdings go for around 207,000 Bitcoins, which represents a 0.98% of the total Bitcoin, and their sources come from various seizures from criminal activities such as the Silk Road operation and the 2016 Bitfinex hack. Number two, we have China, which holds 194,000 Bitcoin, and that represents a 0.92% of the total Bitcoin in the world. Next, on third place, we have the United Kingdom, which has 61,000 Bitcoin. And on fourth place, we have Ukraine, which holds 46,000 Bitcoin. Germany, who holds 22,000 Bitcoin. El Salvador, which to my surprise holds 5,700 Bitcoin. Finland owns almost 2,000 Bitcoin. Georgia, 66 Bitcoin. Venezuela, 240 Bitcoin. And Bhutan, 621 Bitcoin. The total government holdings represent around 539,000 Bitcoin, right? Which is about 2.56%. Now, when it comes to private companies and institutions, MicroStrategy holds 124,000 Bitcoin, Tesla 48,000, Square 8,000, public companies around 327,000, which is like 1.55% of the total supply. Private companies, 525,000, which is a 2.5 of the total supply. And obviously, we have other significant holders such as Bitcoin ETFs, BTC mining companies, DeFi and other entities. The theoretical maximum supply is 21 million, right? But you have to keep in mind that the current circulating supply is around 19 million only. The remaining Bitcoin is held by private individuals and small investors, which collectively account for the vast majority of Bitcoin's total supply. This decentralized ownership is a key characteristic of Bitcoin, reflecting its nature as a widely distributed digital asset. When it comes to the top private individuals holding Bitcoin, we have the unknown creator Satoshi Nakamoto, who holds around 1 million Bitcoin, right? We have the Cameron and Tyler Winklevoss, who hold around 100,000 Bitcoin. And these are the founders of the Gemini cryptocurrency exchange and early Bitcoin adopters, right? We have Tim Draper, who holds around 30,000 Bitcoins, Michael Saylor. I'm gonna end up saying that one of the key reasons Bitcoin is so revolutionary is its underlying technology, blockchain. Blockchain is an incredibly secure due to its decentralized nature. Each transaction is recorded on a public ledger, and these records are maintained by a network of nodes. This decentralized system makes it nearly impossible for a single entity to alter transaction data without the consensus of the network. Furthermore, Bitcoin's network has undergone numerous forks, ensuring its security and robustness. Even with the advent of quantum computers, which pose a theoretical risk to current cryptographic methods, the Bitcoin community is proactive. Forks and upgrades to the network can introduce quantum-resistant algorithms, ensuring that Bitcoin remains secure and resilient. I believe Bitcoin is the future of money. Despite its ups and downs, Bitcoin has proven to be resilient and a valuable asset. Since its inception, Bitcoin has shown a pattern of long-term growth, making it an asset worth holding in the long run. Its limited supply of 21 million coins ensures scarcity, a fundamental principle that underpins its value. This scarcity, coupled with increasing demand, supports the notion that Bitcoin will continue to appreciate over time. Additionally, Bitcoin offers a form of financial freedom that is increasingly important in our world today. Just look at China and its central bank digital currency, CBDC. The Chinese government uses its digital currency to track the spending habits and financial activities of its population. This level of surveillance and control is something that Bitcoin can fight against. Bitcoin transactions are pseudonymous, providing a layer of privacy and freedom from centralized controls that traditional financial systems and CBDCs cannot offer. In conclusion, Bitcoin's robust security, ensured by blockchain technology and continuous network improvements, makes it a reliable and safe asset. Its potential to resist future technological threats, such as quantum computing, adds to its long-term viability. The inherent scarcity of Bitcoin, combined with its demonstrated resilience and growth, makes it a valuable asset worth holding. Moreover, in a world where financial privacy is under threat, Bitcoin offers a way to reclaim financial freedom. By understanding these principles and looking at the trends, it's clear that Bitcoin is more than just a digital currency. It's a transformative financial asset that represents the future of money.